$50 an ounce is just an area where it's going to bounce off of resistance for a little while. And then it should blow past it. And I believe $150 silver is absolutely appropriate. And I also believe this is the last opportunity to take advantage of something like this. This is the last great precious metals bull market. We're going to have AI soon. And when we reach that singularity, when it just takes off, we're going to be after that in a commodities bear market.
In a bold move set to disrupt the global precious metals market, Russia is adding silver to its reserves for the first time. This marks a significant strategic shift as the nation continues to strengthen its holdings in gold, platinum, and palladium. With 51.5 billion rubles, approximately $538 million, allocated annually for precious metals purchases through 2027, Russia is positioning itself to withstand economic sanctions and market volatility, reinforcing its financial defenses. At around $32.20 per ounce, silver is widely considered undervalued compared to its historical highs. During the 1980 Hunt Brothers surge, silver reached an inflation-adjusted peak of $143.54, and in the 2011 bull market, it climbed to $68.90. Given today's economic landscape, rising inflation, mounting global debt, and increasing demand for hard assets, analysts believe silver could soon break past the $50 per ounce threshold. Mike Maloney believes silver is poised to break past $50 and soar to $150, driven by global economic factors and Russia's strategic accumulation of silver reserves. He highlights that, much like in the late 1970s bull market, worsening economic conditions will push central banks and the public to flock toward precious metals. Maloney's foresight has proven accurate before. His first book, published just months before the 2008 global financial crisis, warned of an impending meltdown that would crash stocks and real estate while sending gold and silver soaring. Those who listened to him then profited significantly, and he sees similar potential for silver in today's economic climate. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 11% of you are subscribed, and we're aiming for 1,000. Your support will make a big difference.
Russia probably won't push, by themselves, silver beyond $50, but it really doesn't matter. What we've seen over the past few years here, several years, is that, sorry, my phone was, need to put it in airplane mode. The accumulation of the world's central banks of gold, it's been very slow and measured, like Poland now. When the world's central bank, when stuff starts going bad, and it is going bad, and all you have to do is look at the 30 seconds to midnight series and the data that you helped me put together, it's in the book, about the Fed going bankrupt and about the payments that they are unable to make because there's no profits left. They used to be profitable from 1914 until September of 2022. The Federal Reserve was profitable and turned over their profits to the Treasury. And now they owe the Treasury about $200 billion. They've given the banks $500 billion, and it's all in the 30 seconds to midnight. The Fed is bankrupt. The 30 seconds to midnight series is one that everybody should watch. But as the world's central banks start to rush toward, it's like back in the bull market of the late 70s, people were sort of walking at first toward gold and silver, and then they ran, and then it turned into this big rush. And when it did, gold, which used to be $35 an ounce, was now over $400 an ounce. And it seemed like that was really high, $400 an ounce. And so that's when the public started to change their preference to silver. The world's central banks will do the same thing. So Russia is just the leader in this. They are the first. Later on, there will be more central banks adding silver to their reserves. And when that flood comes, when gold starts getting too expensive, even central banks will look at the silver and they'll go, the gold silver ratio is up at 80 or 90 or what, if the world's central banks start rushing into gold first, maybe that gold silver ratio gets back up to 120 or something like it did during COVID. But at that point, the world's central banks will change their preference just like the public did back in. Yeah. And yes, where it says beyond $50, yes, it's going to be way beyond. As we looked at the expansion of all of the stock market, currency, several different measures of the currency supply, the price of real estate, the price of this, the price of that from the 1980 high. It was some astounding numbers. Some of them, if you used that expansion, were giving us quadruple digits. So you were over $1,000 an ounce if silver went into the same kind of bubble against other assets that it was in 1980. And as we know, history very often repeats. I like to say it always repeats, but with little twists. And so, I think $50 is just an error, as sort of a stopping point on the way. It should go up and hit that, and there will be a bunch of people that see that as resistance, and they will sell. But then it'll build another base and blow right through that $50 thing. And just remove the word potentially there from the last sentence.
That's right.
Just replace it with go. An ounce and go much higher.
Since 2008, mounting evidence suggests that the fiat currency system is nearing collapse. People can sense it. They're working harder but earning less. The Federal Reserve, however, doesn't want you to believe this is happening. Yet, a currency crisis is mathematically inevitable. In the near future, there will be a brief, extraordinary moment where you can significantly increase your purchasing power, if you're properly positioned today. For years, bullion banks have used loopholes in reporting to artificially suppress the price of gold and silver. While stocks, real estate, crypto, bonds, and nearly every major asset class have attracted trillions in new investments, gold and silver have been largely ignored. Mike believes this is the final bull market for gold and silver, the growing central bank interest in precious metals, and how the weaponization of the US dollar is accelerating the decline of fiat currencies. He emphasizes that gold and silver are the ultimate safe haven assets, with supply-demand dynamics that initially follow predictable patterns but can quickly flip, behaving in the exact opposite manner as their price surges. Now, let's redirect our attention to a video.
The only thing that's proven to hold its value through the centuries is gold and silver. They are money. So far, nothing else is. Maybe Bitcoin will be in the future. I have no idea. But they're diversifying their reserves into hard assets like gold and now silver. Fiat currencies rapidly losing value. Yes, we used to have, very often people will compare, and we've done it many times, all the fiat currencies like skydivers. After they've jumped out of a plane, they're all falling at different rates. They've got different size parachutes. They weigh different amounts. They're all going down at different rates compared to gold. Well, it was August 15th of 1971 that we jumped out of the gold airplane. The gold is not a parachute. The gold was the airplane that all countries jumped out of when the U.S., which was the hub of the Bretton Woods gold standard, when Nixon ended that relationship to gold, all countries on earth were like pushed out of that airplane. We all have these floating exchange rate fiat currencies that are just insane and make it not just difficult to invest somewhere and do import and export, but they also make it difficult for travel. And then Russia being locked out of the SWIFT system. The worst thing that they could have done for the dollar, the global dollar standard, is to weaponize the global dollar standard. When they did that, that was what the biggest, since 2009, I've been giving presentations on the death of the global dollar standard. And it's happening very slowly, and it will continue to happen slowly until the day that it doesn't happen slowly, and then it'll happen very rapidly. And the biggest nail in the coffin so far was the weaponization of the dollar. It's got all of these countries trying to figure out how to get around the dollar, but it's difficult because, like George Gammon says, it's just like apps on your iPhone. What phone has the most apps? Are you going to buy an old flip phone? The dollar has the most apps, basically. It's got the most things that you can do with it. All of the different derivatives and the trading that goes on. There's nothing else that people can just run to instantly that is an alternative. Gold and silver are the ultimate Giffen good, where their supply-demand dynamics versus price are pretty much, they go along with normal supply-demand dynamics and then suddenly flip, and they're exactly the opposite of normal supply-demand price dynamics.
While central banks worldwide have been stockpiling gold, surpassing 1,000 tons in 2023, silver has largely been overlooked despite its dual role as both a precious metal and a crucial industrial commodity. Russia's recent decision to accumulate silver signals a potential turning point, positioning the metal not only as a store of value but also as an essential part of the future global economy. September saw renewed optimism for silver, with prices surging by 7.96% and hitting their highest level since 2012, surpassing $32 per ounce on September 26. Although prices have slightly pulled back from this peak, they remain strong, showing a 2.16% increase in the early days of October. How does the recent performance of silver compare with its historical peaks? And what might this indicate about future price movements? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.